Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Wednesday, December 7th, 2016, and this is the Daily Report for Gold and Silver. On the heels of a Dow Jones Industrial Average and Standard & Poor's going to new record highs, we do have the precious metals actually moving in tandem with that upside move. A little bit of weakness in the U.S. dollar, of course, contributed to this strength. But overall, we have a marketplace which has been dramatically oversold over the last couple of weeks. And the real question is whether or not we have any kind of potential bottom at hand. Gold closing up about $5 on the day. More importantly, closing above 1170, that key critical area that we have been looking at over the past couple of weeks. 1174.90 with a low of 67.20 and a high of 1182.30. Net change on that, about 0.4%. Silver did exceedingly well, far outperforming any kind of percentage gains that we saw in gold because you have that industrial component to silver, closing up 2.25%, a 38-cent rise in silver, over $17 at $17.19. Tremendous move with a low of $16.70 and a high of $17.30. So traders, considering the recent run we saw today in U.S. equities markets, culminating with new record highs in the Standard & Poor's, new record highs in the Dow Jones, new record high in the transports, which is the first time that has occurred in 2 years. The fact that we have a higher precious metals complex overall, I think is impressive. The real question we've got to ask ourselves is whether or not on a technical basis this market is oversold, and we are finding some support at a key area, an area that we are looking for to see whether or not the market can hold recent pricing, because the area at around 1170, and we've talked about this for weeks now, is a pretty critical area as far as I'm concerned, because a move dramatically below this particular price point really negates any kind of a real bullish model that would look at the recent move at the beginning of the year from the lows at 1050 up to these highs of 1380, and the subsequent retracement, a move well below this, would signal that we are in a selling period rather than this particular decline being a corrective wave in relationship to the overall move, which of course was up for the first part of the year, then down. A move to 61% still holds in line a model that we find support and then move to higher ground. A move substantially below this, and especially below a 78%, would absolutely negate it, that we are still in any way in some sort of corrective period of a larger bullish model. Now, that being said, today's move was largely predicated upon a weakening U.S. dollar. I've just gone ahead and pulled up the Kitco Gold Index. When we do that, this of course is looking at spot up about $3 on the day, but according to this index, that gain is pretty, well, it's 100% due to a weakening U.S. dollar, and really not due at all to gold traders bidding it up. In other words, buying the dip and bargain hunting. However, the same cannot be said for silver. Silver not only took the incentives of a weaker U.S. dollar, but then it added a substantial amount to that, another 2%, to give us a net gain of over 2.25% on the day in silver. Now, I've gone ahead and converted our daily chart that we've been typically looking at in bar and candlestick format to a Japanese average chart, because a Japanese average chart, although it is very much a lagging indicator, will give us a real consensus as to strength of the overall current trend and really give us an idea of potential pivots in the market. We are certainly starting to see that today. Take a look at recent activity. Over these last, 1, 2, 3, 4 trading days, 2 of those trading days were defined as pivotal candles, those doji candles that we look for in a Japanese average chart. We have also seen, even on the 2 red days, that really we're in between these pivotal candles, you can see that body size has greatly reduced. And what that says is that the trend, this current selling trend, this current dynamics in the market, taking gold prices lower, does seem to be hitting an exhaustion period. And really what that's saying is we are in an oversold market, and we could in fact see this market bottom very, very soon. Which brings us to the current activity in silver. We are looking at a Japanese average chart. I'm going to want to convert that time permitting, but we've got really a different look and a different sense in silver than we're getting in gold. Because in gold, we are questioning whether or not we're looking at a key reversal, a pivot point, a defined trend in transition. In silver, it's quite clear that we have, in fact, seen this market bottom. It bottomed at the 61% retracement. That was a key level that we were looking for. You can also see that you've got 3 pivotal candles here, and now we've had over the last 3 or 4 trading days a nice ascent upward. So on our next position in precious metals, we definitely are going to be including silver into the mix. And traders also, it's clear to see that when you convert the Japanese average chart of silver that we've been looking at back to a candlestick chart, it is not as clear cut. You've got a lot of oscillating candles, small body candles, at least for the better part of last week, without any kind of indication that a trend was in hand. And that's one of the reasons that the Japanese average chart can give one so much information and give you information that, simply put, is not available in a standard candlestick chart. We definitely have signs in gold that a bottom is forming. We have clear-cut indications in silver that a bottom had formed and is now moving to higher ground. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.